All right, so when it comes to the advanced market structure, we have two types of what structures are getting it. We have the complex pullbacks and we have what the trending market as well, as in the high highs and high lows, right? All right, so simply what I mean is when price is trending up, what we all know is what price from what a series of these high highs and high lows, right? There's a basic knowledge of what market structure that most of you guys know, right? But structure on its own, structure is a topic on its own, right? And on the bearish market, it also forms what series of what lower highs and lower lows. All right. But what most of us don't know is what they don't know that we have a structure in a structure. I get in it. So what I basically mean, we can have H4 structure. Then when you come to H1, is you can have another what structure within the H4 structure. I get in it. So basically, let's say this is a structure on the H4 time frame, right? It's a whole or it's a move on its own, right? But when you dive into the 1 hour, you see that we have something like this inside, right? For this move, right? So on the 1 hour, you see that we have this kind of what movement within this H4 trend, right? So we call this what as a complex pullbacks, right? We call this a complex pullback. So how we read this is, let me show you how we read it. All right. So we read it as on the H4, we always have to what correlate time frames, right? We always have to correlate time frames. So we have time frame correlation. So H4, we have this low, higher high, higher low, higher high, and possibly maybe what's a new higher low before the trend continues, right? Then on the H1, we have this complex pullback inside. It's a complex pullback because what this move over here didn't break this H4 high. Are you getting it? This H1 move over here, which is a high on the H1, right? It didn't break this H4 high, right? So it becomes what a complex pullback. Are you getting it? It becomes a complex pullback. Good. So when you are on the H4 and you want to catch a continuation trade, what you need to do is what you use. First of all, let me show you guys this. We have the premium price and a discounted price as well, right? So when you are looking for buys, we only look to buy at what a discounted price. I get it. So over here between the 78 and the 61.80 is what we call the discounted price, and we have the 50, which is what equilibrium, right? We have the equilibrium price. Then we have the premium price also. When it comes to what selling, when you are looking to sell, we only look for what POIs within our what premium price, right? So this is how to get what a perfect order block for your continuation or reversal trades. Always look for what POI within your what the premium price and your what the discounted price. Never look for what a POI what's below the equilibrium price. No, that will be what a fake out or what an inducement for what the premium price order block or what's inefficiency or IFCs and other stuffs, right? Our entry price, entry model. Good. So right now you are looking for a buy, right? You are looking for a continuation of this trend. What you need to do is what? You just have to fib your discounted what? Fib from your H4 what? H4 higher low to the H4 higher high. Then right now what will happen? Yeah, your H1, which is a complex pullback that you had inside this what H4 structure, is going to be what is going to be a zone where you'll be looking for what your POI at. You can see that if you flip your discounted fib from this low to this high, you can see we have our discounted price over here. And within our discounted price is where you should always look for what your point of interest at.